Hello and welcome to Tackle Trading Series 101. Today we're going to be talking about the trading orders and how to place your basic trading orders. I am your instructor today. My name is Trading Coach Gino. And real quick disclaimer before we get into these, we have a lot of series on trading. That's what we do. So real quickly, in the link below, hit like and subscribe, and you'll be following the best in trading education. And also stay tuned for more coming up, and I'll show you a special link at the end where you guys won't miss any of our upcoming events. I'll give that to you at the end. But first, who am I? I am trading coach Gino Poore. I've been trading stock and options since 1998. I've been trading since 1998, so that's quite a few years. But I mentored and taught many students, over 500. I'm founder at Tackle Trading. I put an emphasis on very basic and simple, like I'm going to do today. Also, I've traded and created different indicators that we also teach. And I'm one of the few instructors that actually use and teach portfolio risk management, otherwise known as hedge fund trading. But we're not going to get into the advanced stuff today. We're going to go into the basics. Like I said, these are a 101 series. What you're going to learn: basic market orders. We're going to learn about stop orders. We're also going to learn how to apply something called bracket orders that automates and makes your trading much easier. That way you can learn how to set it and forget it and take the emotion out of the trade. So getting started, just to understand the transaction of orders, you need to know it's basically a trade, which means there's a transaction between the buyer and the seller. The buyer is the person taking delivery of the security, and they're willing to pay what's called the asking price. The seller delivers the security, typically known as the bid price. So when you're looking at a price of a stock, if you haven't seen it before in your broker, it's displayed as the bid ask spread or the bid ask price. Example, 10 by 10.05. As a buyer, you'd be buying at $10.05. As a seller, you'd be selling at the bid at or $10. So of course, we'll learn how to get in between those orders. But with our orders, we don't need to know that. We just have to know how to place the basics of the orders. So again, I'm going to break down the types of orders. Number one is the most simplest: market order. This is an order when you buy or sell a security, to be executed immediately at the current market price. And then you have another kind of order called the limit order. And this is the kind of order we place on a security where we tell it to buy at a specific price or no less than a specific price. Also known as a limit order is also known as a or better order. So you want it at a specific price, not whatever it's currently trading at. And then you have an exit order, otherwise known as the stop order. This is an order to buy or sell a security once its price reaches a specific level, known as the stop price. Also, it's known as the trigger price. So when you hear the word stop order, you kind of replace the word stop with trigger order. You're trying to specify when a stock crosses a certain price, you want a certain action to happen. And then we have a more advanced order, which we're going to get into, is a contingency order. This is where an order that is executed only when certain conditions of the stocks being traded or another security has been filled. So it only triggers the order after something happens, otherwise known as contingency or conditional order. So again, the market and limit order, these are your entry orders. The stop and contingency orders, these are your exit orders. So once you divide it up that way, it's easy to remember. Do I want to enter with a market order or do I want to enter with a limit order? And then where do I want my stop? And do I want to use a contingency? So those are your four basic types of orders. Now, when we put these together, you can make it real simple with a market or limit order, and you can make it real simple with a stop order, or a little more advanced with a contingency order. But if you want to do it all in one ticket so you don't have to come back and put in your stop price, you just want to set it and forget it, pretty much build the entire trade, we call that a bracket order. Now, bracket orders are a little more advanced, and I'm going to show you on a Thinkorswim platform today how I use it to really speed up the trading, also to erase any future mistakes, because once you set it up correctly, you can use it in the future. And also, a little tip in trading here, it takes the emotions out of the trade because you don't have to be there and think about where's that stop order go? What did I want this to do? You basically plan the trade and trade the plan right there. A set it and forget it is what we call that. So understanding time and force, this is very simple. When you get your order ticket, you're given a choice as day order or good till canceled. Now, a day order is simply an order to buy or sell a stock that automatically expires if they can't fill it before the bell. So if the market's still open, it's only good for today. And a lot of systems are defaulted to day order. And then there's what's called a good till canceled. Now, sometimes simply called the GTC order. It means an order to buy or sell a stock that is good. The order stays out there until you cancel it. So how long do you want it to be out there? You have to come back and check these, but these orders stay there until you cancel it. So again, day order and good till cancel it. And I'm going to break this down in an example here in a second. Now let's talk about the different kinds of orders and comparing. So there's different ways to enter. The simplest when using an order is the buy stop order. A buy stop order will execute at the set price or higher, otherwise known as the trigger price. So you can simply go in there and say, I want to buy now, and just hit the buy market and get the price right now. So if I came into the market and I just said, I want to buy at the current price, I just hit buy at market or buy at that current price, which is currently 32.23 cents. But if I put in a buy stop order, notice this word right here, trigger. That means I don't want to buy the stock exactly right now. I want to buy it if it breaks above resistance of, let's say I have a trigger price of 32.35. I want the stock to actually go up and trigger or cross 32.35 before I'm in. That's my buy stop order. So don't get that confused with being stopped out. It's actually called being stopped in or triggering you in. And as you can see in the demo here, it's 32.35 and higher. So it has to break through resistance to be filled. Then there's another type of order, very similar, called the buy limit order. Now the difference is the buy limit order will only execute at the set price or lower. So in this example, same stock price, the stock's at 32.23. My buy limit might be at 32.50, which means I want to buy at 32.50 or lower or better. I don't want to pay more than that. So that's the limit, because I'm putting a limit on how much I want to spend, which is also another way of putting a limit on your risk, your cost. And that way you can manage your money and you're not going to pay anything over that. But again, you're buying it at that price or lower. Almost exact opposite of the buy stop order, which is that price or higher. So if you like the current price and you want to make sure you don't pay too much, you would do a buy limit order. And then finally, the third one is the buy stop with a limit order. Now, this is a combination of the buy stop, the previous one, with the buy limit order. So putting those two together, you're saying, okay, here's the current price at 32.23. I want to trigger in at 32.35 and higher. That's my trigger point. And I don't want to spend more than 32.50. This way, if the stock is moving too fast and it gets over what you're willing to spend, you don't end up paying too much. Another way we use this is if the stock is moving too fast and it gets over what you're willing to spend, you don't end up paying too much. If you're worried about a gap order and it's gapping over a certain price, you don't want to get stuck paying the higher price, you put a buy limit in coordination with your trigger. So basically what you're saying is you want to be filled anywhere below 32.50, but above your trigger of 32.35. Again, that's called a buy stop limit order. So those are your entry prices. That's your entry orders, different types. And there's some fancy ways of doing contingent orders on that, and I'll show you. But now I want to talk about exit orders. Exit orders, most common is what we call a stop loss. A stop loss order is a market order that helps limit a trader's losses. It works by providing the broker with instructions to sell, that's if you're long, or buy back if you're short, the stock when it reaches a certain trigger price, otherwise known as your stop loss. This way, you don't have to keep your eyes on the trade. The broker knows where you want to exit. So for an example, let's say the current price of the stock's at 32.40. A sell stop order triggers a sell market or a sell limit order when the price trades at or below the price you select. And as you can see here, the sell stop order is set at 32.10. So if the current price is 32.40, if it starts to sell off and hits 32.10, it will sell at any price below 32.10 or lower. And that's how you protect your downside and you limit your risk. In this example, if you bought in at 32.40 and you put a sell stop at 32.10, you are limiting yourself to 30 cents risk per share. Again, it's called risk management by placing orders. So then you also have what's called a sell limit order. Now, this limit order is an order to buy or sell a stock at a specific price. A sell limit order can only be executed at the limit price or higher. So when you sell at a limit, it's saying sell at this price or higher. So again, here's the current market price at 32.23. If we do a sell limit at 32.50, we're telling the market we want to sell only if it goes above 32.50, which means it would have to climb up and trigger at 32.50. So that would be a sell limit or sell at better than 32.50, and at better than order. And then of course you have your stop loss order below it, which is a different kind of sell order. So to put it all together, if you were to do a bracket order and put all three together where you have your entry, your limit, and your stop, or your entry and your target and your stop, here's the current price at 32.23. Let's say we enter there. We can do a buy stop limit at 32.35 to make sure we get filled at 32.35 or less. We put a stop loss at 32 to limit our risk. And then we can do a sell limit at 32.50 for our target. So once again, we have our first order triggers what's known as an OCO, otherwise called a one cancels other. Now how that works is our first order, whether it's triggered or placed, once it's filled, it's going to put in what's known as your target and your stop loss right after it's filled. So that way you have your target in place, where your target, that's where you're trying to you make money, and your stop loss in place, which limits your risk. So that's called an OC order, and it's one of the best ways to set it and forget it. Now, real quickly, I want to take this live and go into the Thinkorswim platform and show you how this works. And I'm going to bring up Thinkorswim here. And not everybody has Thinkorswim as a very popular broker, but they're all very similar. And how do you find your trades is up to you. But a real quick plug on Tackle Trading. We have a wonderful site where we list stocks. And if you're brand new and you don't have a screener, we have a famous report we put out every weekend called the Traders Report. And in the Traders Report, this is the most recent one, we put out the best stock and option picks, both on the bullish and bearish side. and then we post them over the weekend so you can prepare yourself with these contingent orders. So you don't have to be there during the day. And I want to show you how that works by setting a couple of these up. I'm just going to scan on some of these setups here. Like here's McCormick, here's Sound. Here's one of the trades we're doing recently, just looking at a trend reversal here on Sound. So you find your pick. Let me see if I grab another one here. Here's one that triggered today, Fly W, just to show you how well we do. Gonna brag about that real quick. But I'm gonna bring up a cheap stock, no sound. So in your paper money, you want to practice the mechanics of these orders. That way you can see if you're making any mistakes. And we do have coaching and mentoring and classes to help you. But let me show you how easy these orders are. I'm gonna walk you through a basic order on Sound. Next time it breaks the resistance here of about 16 and a half, we'll call it 1665. I'm going to go into Thinkorswim, look at the chart, and on Sound, I have already drawn my entry. I want to enter at 1665. My target's going to be just below this overhead resistance at $19, and my stop loss is going to be right here at 1450. So what I want to do is I want to trigger if the stock breaks 1665. Now there's many ways to get to your order ticket on Thinkorswim. If you're at the chart, I can simply just right click and buy. I can hit buy, left click on buy, and it's going to put a ticket here, and I can send this in and it's going to go in, buy right now at that price. But what you want to do is you actually want to go over to this trade tab on the top left, and that's going to give you a little more flexibility on these order forms. Once you're here, you're going to notice what I went over before, the bid ask. I'm going to go, I want to buy the stock. I'm going to hover above the ask. If I left click the ask, it brings up the order ticket. You can see the order ticket came out down here below. Now, if I left click on the bid, it's going to assume I want to sell. So again, buy at the ask, sell at the bid. So once again, I am going to buy, and there is a little buy flag that pops up. I'm left clicking on it, and notice that turned into a green bar. It's a stock trade, buy. The next column here is whatever you defaulted. I'm defaulted to 100 shares. This is auto. We're going to leave that at auto, so when the market's open. The stock symbol, it's a stock. And here is the current price. Now, if I want to get in at the current price, I would just put in market. That means whatever the market, if it's open, it's going to fill me somewhere between the bid ask as it's moving around. That means I'm ready to get in, and notice it's not getting you any choices. The next and final part of the order ticket is the time in force. Now, time in force is defaulted today, but you can change that to good till canceled. So if I hit this button and the market's open, it's not, that's why it won't let me do it in right now. It'll actually get filled right away. Now, if I confirm and send right now, it'll send it in. I'll be filled at market on the open since the market is closed right now. That's basically getting filled at market. And then if I'm filled, I can simply say, okay, I'm ready to get out. I hit sell. Here's the stock, here's the number of shares, and then I would put sell at market, and that would get me out. Now, market order is just going to get you right in at the current price. You're not going to get many choices or any risk management. It just gets you in. And that's not real automated. You have to be there. What I want to do is I want to set a limit order. Again, I'm going to left click here on the ask, and my order ticket's going to pop up. Now, what I'm going to do is I'm going to bring up the chart so you can see my prices. And when you do that, a nice thing about the platform is your order ticket is saved down here in this little tab. So you can see that the chart numbers are up here. I'm going to make it easy by populating these numbers into my order ticket. And I'm going to do it one step at a time here. So do I want 100 shares? That's up to you. But just as a practice trade, maybe I want to lower this to 50 shares. And then do I want to buy right now at the current price or limit of 1530? Maybe I want to make sure I don't pay more than 1665. So I'm going to put 1665 in here. What that means is I don't want to pay more than $16.65. And if I hit the button right now, this order will go in because the stock price is currently trading below that. I'm saying I want to be filled at $16.65 or lower, and that's where the price is. But what I want to do is I want to wait till the stock breaks through this resistance. I want to make sure the stock is breaking through this key level that Frank gave us on the reports. If you go back, there's a key level that's what we call our trigger point. So I want to make sure the stock is bullish and breaking through this high. So what I'm going to do is I'm going to change this to a trigger. Trigger means the stock has to cross through that point. Now, if I place this trade right here, this is good for today. I'm going to give it until I cancel. So until I cancel it, it's going to put an order to buy 50 shares at $16.65. Now watch when I send this in. I'm going to confirm it, confirm how much it costs, okay the order, and send it in. And now you can see I have a trigger to buy 50 SoundHound shares at $16.65 when it crosses that price. And if it doesn't cross that price, it's simply not going to get filled. Now, what I want to do next is I want to do the same order, but this time I want to put a stop loss. So to do that, I'm going to click on the ask and see how it brings up the order ticket. I'm actually going to delete that. And this time I'm going to right click, buy custom with a stop loss. This way I can tell it, let me just bring up the chart so you can see this. This way I can say, okay, buy at $16.65. I want to make sure it triggers above $16.65. And my stop loss is going to go at $14.50. So I'm going to put my stop loss in here. And this is going to be good till canceled. Both. And by the way, stop losses are always good till canceled. Over here, do I want to buy 100 shares? I think I'm going to do 50, just a small trade here. And I'm going to put 50 on the stop loss. Now, what you're going to notice is I have my entry and my stop ready to go. This way, when I place the trade, I confirm and send buy 50 at $16.65 to open the order. That's going to be buy in to open. Then it goes to order number 2. I don't have to be there. It's a set it and forget it stop loss. Sell 50 shares at $14.50. And you can see that's a drop of $2.15. I times that by 50. That's $100 and some change. If order number 1 is open and filled, I send that in. And now I have my trigger to get in and my stop loss. As soon as this is triggered, that's going to disappear. I will own 50 shares. I can come in here and take my stop loss and move it to where I want it. A very nice feature where I can actually even change my stop right there maybe. Or, maybe I want to widen it up. So I have control over my stop loss and my order entry once I'm in. This way, it's less mistakes and much more time saving to have that in there. So that's a trade with the stop loss. I'm going to click the X to get rid of that. And now I'm going to build a bracket, set it and forget it. Now the set it and forget it order is one of my favorite because it's the same thing we just looked at, but on the set it and forget it, I'm just going to go in here and instead of just left clicking and putting the stock order in, I'm going to right click, buy custom, and there's buy custom with the OCO. Now that's one cancels other. And this is going to allow you to actually put in your entry order, put in your target and your stop. And then I'm going to show you a way to where it's simple, very, very simple and no excuse not to use it. So I'm going to left click right here. And as you're going to see, you've got 1 green bar and 2 red bars down here on the order ticket. This is called first triggers OCO. Another way of saying that is your entry order is going to trigger a limit and a stop order. So what you have is you have a little chain link linking your 2 exits. You have your 1 entry and 2 exits. So when if it hits your limit order on your target, it cancels your stop order. And vice versa, if it hits your stop loss, it cancels your target. So you can either hit your target or your stop loss, not both. Now in here, again, just to bring up the chart, just to show you what I'm thinking, I'm going to go down to my order ticket so you can see the prices. And I suggest this so you don't forget your exact numbers. So you plan the trade and trade the plan. So I'm going to start with my entry. I'm going to buy 100 shares. You know what? I'm actually only going to do 50 just to show you how I manipulate this. And then I'm going to make sure my stop and target are the same. If I buy 50, I only want to sell 50. So these all match. Over here, do I want to buy this now? If I did, I'd make that a market order. Or do I want to buy it at a certain price? No, I want to buy this if it breaks through 1665. So if it breaks through 1665, that's going to trigger me in. My limit is my target. I only want to sell if it goes higher than $19. I'll put my target in there. That's $19 up here. That's my target. My stop loss is at $14.50. So I'm going to put that down here, my stop loss, to limit my risk to $14.50. Now, what if I was worried about a gap? I want to make sure I don't pay, let's say if it triggers 1660, let's say it goes to 1675. Am I willing to pay a dime more? Maybe so. In that case, I can actually come in here and do something called a stop trigger with a limit. What that means is I'm willing to trigger in at 1665. But I don't want to pay more than 1675. So what I'm saying on my entry is that's my window of being filled just above this area. That way, if it's moving fast or it's gapping, I don't get burned on my fill. And I still have my target in here and I still have my stop loss. Now, when you go through this, you're thinking, that's a lot of steps. That's a lot to remember. I'm going to make sure this is good till canceled, good till canceled, good till canceled. It makes life easier. Double check the order, confirm and send, and you can double check buy to open. And here's my target and my stop. So once you have it, oh, my limit order, I'm going to fix that. That's supposed to be 19. And my stop loss is 14.50. And that's why they give you the confirmation to make sure your numbers. So I'm going to just put this up here just like that so you can see it. I have 1665 as my trigger in, 19 as my target, that's a limit, and a stop loss at 1450. Now, you're thinking that's a lot to remember, and it is. It is. But this is what you want to do. You want to get good at placing these, or to make life easier next time, there's a save button. Let me point out the save button. There's one thing you want to catch right here is once you have it perfected and you have everything checked, you've got everything the way you want it, why not save this for next time and put this in a save button and call it what you want? So I'm going to click this right here. This is going to be my tackle trading basic class. This will be my OCO limit order. And whatever you want to call it, OCO bracket. Whatever you call it, that way you don't have to do this every time. So for example, I'm going to delete this order. I'm going to show you how easy it is to set it and forget it. I'm going to find my numbers on the chart. When I go to trade, again, I can right click on the chart and buy. But this time I'm just going to buy custom, and you're going to see I've got many of these set up. Here's my one trigger, set and forget. When I left click this, everything's already set up so I don't make any mistakes because I've built this bracket and it saves me a lot of time. All I have to do is decide, do I want 100 shares? Maybe I want to change that to, let's say, 60. I'm going to line those up so it's the same number. So I go over here, and all I really need to do after deciding how many shares is enter my key numbers, which again are pretty easy to do once you have this set up, because I don't know if you noticed or not, but on our traders report, we have the numbers right here for you. We have the numbers to make life easy. So once you have your bracket set it and forget it orders, they're right here. You can see exactly where we're looking at for target, the entry, the stop loss, and the first target. So you can build your OC orders around the key numbers that we already did all the legwork for you. So I'm just gonna put this in here real quickly. That is gonna be my stop trigger. And I wanted, if it breaks, 1665. My limit is up here at 19. And my stop loss is at 1450. Again, double check it, confirm and send. I like to put this next to the chart so I can see it. I'm going to send that in. The market's closed. Double check where my lines are. If I want to adjust my stop loss from here, I can move it. If I want to adjust my target, my target or my entry, anything can be adjusted on the fly. There you have it. That's my set it and forget it. There's no emotions in this trade. I planned the trade and the trade is done. It's planned. So that's what you get for order basics. There's more advanced orders we're going to get into. But real quickly, as I promised, we do have all these live events coming up to help you with your trading. We do have coming up February 19th, which is just over a week and a half away. Matt Justice will be teaching precision trading, the art of trading options, where he's going to go into precision trading rules to get precise entry stops and targets to reduce risk. This way you can actually use these orders. And I want you to save this link right here. The link will be below this video at Tackle Trading Live Events. Subscribe, hit the like button, follow us, hit the bell on YouTube, and follow our live events and enjoy tackletrading.com. Thank you. This is Trading Coach Gino. Have a great trading week.